Hi traders. Today I will be talking about a very useful and effective technical analysis indicator for cryptocurrency trading. This is one of the most popular indicators in trading, called Fibonacci levels. I'm sure you may have seen them. They look like a grid of these levels plotted on a regular trend chart. What do Fibonacci levels show us? These lines show where the rebound zone from the current trend is likely to be. We plot these Fibonacci levels on the chart, and they show us where a bounce from the current trend may be in the near future. How does it work? You've probably heard of the golden ratio theory or the Fibonacci spirals. Here that principle is transferred simply to working with the schedule. How to put the indicator on the chart? We need to find, first of all, a local trend. We need to see the beginning of the trend on the chart. And we set Fibonacci levels on the local maximum and minimum. And we don't have to go to the indicators menu to apply Fibonacci levels. They are displayed here as a separate tool, and you can even call it with a quick Alt-F command. We select Fibonacci levels and set their lower point at the minimum of the current trend, and the upper point is at its maximum, and we continue it into the future. Note that we set the upper point not on the body of the candle, but on its tail, local low and local high. And now we can see the levels at which the trend correction will end. How does it work? For example, many traders, seeing that the trend is rising, look for points to trade up and place pending orders. There are a lot of pending orders at about 23% of drawdown or 38% of drawdown. And once the chart reaches them, this will be a strong support or resistance zone in the future. The Fibonacci indicator solves the basic problem of trend lines and support and resistance levels. The problem is that we usually build support levels from multiple points. Here, for example, is how the support levels are built right here. We see that there are 3 lows. We put a support level on them and trade from it. The problem is that when a support level has already worked out 3 times and given us positive trades up, that level is already becoming weak. It has already played out in the past. Fibonacci levels allow us, with only the first wave of the trend, to build future support and resistance levels. So, when we put the indicator on the lows and highs of the chart, we can expect that the nearest bounce point could be here, here, and here. These 3 lines are called the golden zone. Usually the situation on the chart looks like trend, correction, trend, correction. And usually corrections end in this golden zone. And in order to trade with this strategy, you need to place a pending order at this level, at 0.23, at 0.38, and at 0.5. Once the chart moves down at one of these levels, it is very likely that the trend will continue upward again. We also have lower levels. We use those as well. For example, we had a trend, we set a minimum and a maximum. We had a correction, and exactly at the level of 0.23. As you can see, we rebounded upwards again. The chart is now growing. It will break through the upper Fibonacci level and show growth. Further, after the level is broken, in this case, we will need to rebuild on the new high. When, for example, a new maximum of the Fibonacci level is formed here, we will need to rebuild according to the new maximum and already start from it. So we also have lower levels. These are 0.618 and 0.786. We use these levels to hedge our positions. If here, we enter an uptrade for trend continuation, we set a stop loss at these levels. According to Fibonacci levels, if the trend has reversed and broken through the 0.786 level, it is a completed trend. And now we need to remove this grid and build a new grid on the trend down, because the trend has now reversed and we should be looking at trades down. Let's take a look at the indicator on real charts. Let's switch to the historical chart and let's try to use the Fibonacci level for our trading. Here we see a trend. We see that it's a clear trend. It's a very important rule that Fibonacci levels, we can only trade in trend areas. In a flat zone, we won't even be able to plot this chart. We need a local trend, and we can now put up a new grid on the lows and highs. The minimum on the chart is right here, and the maximum is right here. So we can build Fibonacci levels into the future. As you can see, this level is built. you may notice that we use these 3 levels for transactions. We go into the deal right here, and right here. And after that, once we open those 3 trades, we can see that the chart started to go up in the future. The chart over time, even here, showed us a profit. This is how we use Fibonacci levels on bullish charts. If the chart were to reverse and break lower levels, such as 0.78 or 0.61, we'd be out of here by now at the stop loss. But here the average price has already brought us profit because we opened trades. Let's look at a similar chart on the downside. Here we see that we've got a downward trend emerging. Let's say we only see this part. We set the Fibonacci grid by local levels, by local high and local low. Here the grid is already exposed in the other direction, in the opposite direction. That is, we will have the initial level at the maximum and the lower level at the minimum, because the trend is going down and we need to find levels of bounce down. Here are the same levels: 0.236, 0, 0.328, and 0.5 is the golden zone from which we are looking for bounces. As you can see, after the trend ended, we hit a correction, and here we open a trade at 0.236, and the chart clearly continues onward. Once we see a breakout and a new high, we need to realign the Fibonacci grid. For example, if we are at this point, we need to remove the Fibonacci extension and build it again. The local low remains here, and the local high has already been updated, so now it's here. And now we're looking for bounces along these lines. We didn't get them, but we got a new high. After the high has been updated, we redraw our Fibonacci levels again and set them now at this local low and this local high. And we continue to monitor the situation. As you can see, here we had a correction. We hit the level of 0.236. This is a signal for trend continuation for a trade down. And as you can see, the chart clearly from this level continued downward. We can use such Fibonacci levels on any charts, on absolutely any time frames. It is a simple and basic mathematical principle that works for all situations. Naturally, the higher time frame you set, the more accurate the signals from our extension will be. But if you master this tool, you will be able to get signals for trades with a profit probability of 85 to 90%. Also, you have here at once a built-in system of exiting trades and closing trades on stop loss. This is a really simple tool, which can be used even separately from other strategies. I hope the video was useful. Leave your feedback in the comments. Write what topics you would like to see more about, and see you soon.